This is the biggest controversy in the marketplace right now. So in the former camp that I described earlier, they have inflation really quite sticky up here. And of course, the second scenario that Nancy is describing here has a quick unwind in the inflation. And my confidence in this scenario has increased tremendously after seeing those inventory numbers at Target, Walmart, and Home Depot. I mean, those are very large organizations, national, and they have a very big problem, bigger than I have ever seen. The reason a lot of people think core CPI will be sticky is rents, because housing prices have gone up so much, rents have gone up so much. I think what's going on the good side is going to overwhelm what's going on the rent side. And we're even seeing signs in some places that the consumer just can't pay up for these rents anymore. You're seeing a lot more mobility, and I have a feeling even rents are going to start adjusting.
Oh, I agree with you, Cathie, that you are already seeing some weakness in housing activity. House sales are down. Housing starts are now flat to down. Housing gets hit first when you see a back up in interest rates. Shelter, the service prices have already been accelerating. We think they go up maybe just a little bit more and then actually slow as we go into 2023. So we think the inflation outlook for 2023, in part because then you start to see some lower service inflation, will be even lower than it is in 2020 and 2022.
So this is one of the charts. If this plays out the way that you forecasted here, Nancy, and I think it will, this is why the Fed will relent. First, they'll relent in terms of their rhetoric. You'll hear them talk, well, maybe we don't have to go up as much. But my guess is they will stop their tightening moves at some point this year altogether. And the stock market discounts the future. The stock market is looking very carefully at these numbers to discern trends out there. And as soon as the stock market understands that inflation is going to unravel and that the Fed is actually going to relent, because they are making a mistake here, and I really do believe they are now making a mistake, tightening into the teeth of what seems to be a very significant slowdown and inventory bulge in the economy. I think that the equity market is going to take off again. But what we will see first is a rotation. And, on certain days we're seeing it, but the last year has been all about cyclicals and value stocks. There will be a rotation back to growth stocks, because if Nancy's right, if we're right, growth is going to become very scarce out there. And so that true growth companies with strong revenue growth in the 20% plus range, to the extent there are companies like that out there, they will be rewarded handsomely as the market shifts away from value back to growth. And it can happen very quickly, because algorithms are also trained to behave this way. Last year, it was straight up and to the right for cyclicals and value, and the momentum carried them probably too far, given what's happening with inventories. And the same can happen in the other direction.